This video is a review of JR Central's fiscal year 2025 full-year financial results, period from April 2024 to March 2025. Central Japan Railway Company, also known as JR Central, is one of the major Japanese railway companies. JR Central also focuses on innovation, with ongoing projects like the development of the Chuo Shinkansen, a magnetic levitation line intended to further reduce travel times between Tokyo, Nagoya, and Osaka. Results for fiscal year 2025. JR Central's consolidated operating revenues increased by 7.1% year-on-year, reaching 1,831.8 billion yen. This growth was mainly driven by higher transportation revenues and increased revenues from group companies. Revenues increased across all business segments. In the transportation segment, the rise was due to increased transportation usage. The merchandise and other segments saw higher sales at department stores and station shops. In the real estate segment, rental income from station area commercial properties grew. Meanwhile, the other segment experienced revenue growth from vehicle manufacturing and the hotel business. Operating expenses also rose, primarily due to higher non-personnel costs at the parent company and increased cost of sales at group companies. However, despite the rise in expenses, both revenues and profits increased. Net income rose by 19.3% to 458.4 billion yen. Tokaido Shinkansen passenger volume and transportation revenues. Passenger volume on the Tokaido Shinkansen has remained higher on weekends and public holidays, when tourism demand is strong compared to weekdays, which are typically driven by business travel. Strong inbound tourism has contributed significantly to this trend. The number of passengers passing through the Tokyo Gate reached 97% of the fiscal year 2018 level before COVID pandemic. For the fiscal full year 2025, revenues were 103% of FY 2018 levels. Osaka Expo. According to estimates from the Expo Association, around 28.2 million people are expected to attend Expo 2025 Osaka, Kansai. Based on public data, JR Central estimates that approximately 6.05 million of these visitors will use the Tokaido Shinkansen. Breaking this down, about 4.05 million passengers are expected to travel between the Tokyo metropolitan area and Shin Osaka, and about 1.65 million between the Chukyo area and Shin Osaka. Regarding international tourists, an estimated 350,000 inbound visitors, specifically those from Europe, the US, and Australia, who tend to stay longer in Japan, are expected to travel between Tokyo and Shin Osaka. JR Central forecasts that the Expo will generate an additional 20 billion yen in revenue for the Tokaido Shinkansen. FY 2026. Forecast. Consolidated operating revenues are expected to reach 1,865 billion yen, 1.8% increase in fiscal year 2026. Operating expenses are projected to increase by 6.1% to a total of 1 trillion yen, 198 billion yen. This increase is mainly due to higher non-personnel expenses, including greater spending on technical development for the Chuo Shinkansen and more frequent inspections and repairs of Shinkansen rolling stock. Additionally, personnel expenses are expected to rise, driven by salary increases. As a result, the consolidated operating income is forecast to decrease to 667 billion yen, and net income will decrease by 7.7% to 423 billion yen. Status of the Chuo Shinkansen project. The Chuo Shinkansen project, which will connect Shinagawa and Nagoya, has received approval for its construction implementation plan. The route map highlights progress. Red lines indicate sections where construction contracts have been signed, while the orange line represents the Yamanashi-Maglev line. For year 2024, capital investment was 243.1 billion yen, below plan due to tunneling delays and difficult geological conditions. Total investment since fiscal year 2014 stands at roughly 2 trillion yen, with 350 billion yen planned for year 2026. JR Central continues discussions with Shizuoka Prefecture, based on expert recommendations on water and environmental issues. At a March meeting, JR Central presented its risk management plan for returning tunnel spring water to the Oi River. 4 of 6 issues have been resolved, with agreement on the direction for the remaining 2. Since early March, JR Central has held 20 briefings in the Oi River Basin, drawing over 700 attendees. Pilot tunnel excavation is underway in Yamanashi, with further drilling planned in Shizuoka. JR Central aims to begin excavation in Shizuoka soon and remains committed to open dialogue with all stakeholders. This standoff has delayed the project's timeline and become JR Central's biggest challenge, as the route cannot proceed without Shizuoka Prefecture's consent. It was originally slated to open in 2027. However, due to unresolved environmental concerns in Shizuoka Prefecture, particularly regarding the potential impact on the Oi River's water flow, construction has been delayed. And now JR Central acknowledged that the 2027 target was no longer feasible, with the earliest possible opening now projected for 2034. The resolution of the Chuo Shinkansen issue is the top priority for JR Central. Shareholder returns. JR Central plans to propose a 1 yen increase in the year-end dividend for fiscal year 2025, raising it to 16 yen per share. This would bring the total annual dividend to 31 yen per share, the highest in the company's history. For fiscal year 2026, the forecasted annual dividend is 32 yen. Dividend decisions will continue to be based on business conditions and performance in each fiscal year. Beyond dividends, JR Central considers shareholders to be important stakeholders in management. On April 30th, the company announced a share repurchase plan of up to 100 billion yen, or 45 million shares, leveraging the recovery in transportation revenues beyond pre-COVID levels. JR Central also presented its long-term cash flow strategy. During the intensive construction phase of the Chuo Shinkansen, before the line becomes operational and profitable, JR Central will prioritize building internal reserves and maintaining stable dividends. Once the entire line is in service, the company aims to strengthen cash flow capacity to support new growth investments and expand returns to shareholders. A policy of stable dividends does not mean dividend levels will remain fixed. JR Central is committed to enhancing profits and cash flow through revenue growth and business reforms, and will flexibly adjust its shareholder return strategy in line with future circumstances. The 100 billion yen share buyback was well received and exceeded shareholder expectations this time. Although dividend increases have continued, the Chuo Shinkansen project requires a significant amount of investment, resulting in a much lower dividend yield compared to other JR companies. Stock price. This is the Japanese yen-based chart for the last 1 year. The Japanese yen stock price is 3,113 yen as of June 5th, and the US dollar stock price is $10.77 as of June 5th. Due in part to the delay in the opening of the maglev line, the stock price had been sluggish for a while, but thanks to the share buyback, it has been on an upward trend recently. The current PBR is 0.67 and the PER is 7.2, with a dividend yield of 1.03%. Compared to the past few years, all 3 indicators, PBR, PER, and dividend yield, suggest that the current stock price is still relatively cheap. Conclusion. JR Central posted strong FY2025 results, with increased revenue and net income, driven by a recovery in transportation demand and record inbound tourism. The company raised its dividend to a historic high and announced a 100 billion yen share buyback, which boosted investor confidence. However, the Chuo Shinkansen project faces continued delays due to unresolved environmental issues in Shizuoka, pushing the expected opening to 2034. While JR Central remains focused on long-term growth, the project remains its biggest challenge.